Right, so let's have a look what happens to your tax when your income exceeds the £100,000 threshold. You may already know that when your income exceeds the 100k threshold that you start to lose your personal tax-free allowance. How it works is that for every £2 that exceeds the 100k threshold, you lose £1 of your personal tax-free allowance. But let's look at an example to explain this better. So we're looking at the 23-24 tax year in this case. In scenario one, if your salary ended up being £100,000 for the year, that means your total PAYE tax would have been 27,432. Scenario two, let's say your income ended up being £110,000, that means your PAYE tax would have been 33,432. If you do a bit of math then and take the difference between the two scenarios, you see your income was £10,000 more, but your tax was also £6,000 more, which means you actually had an effective tax rate of 60%. You only received £4,000 of that £10,000, which is a hefty tax to pay. The personal tax allowance, tax-free allowance for the 23-24 tax year is 12,570. If you multiply that by 2, you get to 25,140. This means that you pay 60% tax on your income that between the 100k and 125,140. If your income is over that, you've lost your total personal tax-free allowance. So what can you do about this? How can you possibly reduce this? A nice easy way to do this is to make extra pension contributions into your pension. So if you make an extra net £8,000 pension contributions, your pension provider will top that up by 20% basic rate or relief at source, which means your total pension will be topped up by £10,000. If you compare that with the first scenario of earning the £10,000 and only clearing £4,000 in your pocket, there's a £6,000 difference between the two scenarios. It's important to note that you can only do these pension contributions before the 5th of April. So it's very important that if you think your income is just going to go over the 100k threshold and you want to make pension contributions, that you speak to your financial advisor as soon as possible. Please note there are other thresholds and limits that you need to consider as well. So again, very important that you speak to your financial advisor before you make the pension contributions to make sure that you will get the tax relief.